But how much negative, what is in the price, and what happens from here on? Abneesh Roy, the Executive Director at Nuvama Institutional Equities, joins in. Abneesh, back early from a holiday because, all the consumer analysts were jolted by this news, and alongside that, the Devyani and Sapphire merger. Let's start with ITC first. The news obviously bad, but how much of it is, perhaps now in the price after a 10% cut? How much more downside do you see from here on? And what kind of volume impact do you expect because of this price hike?
So thanks. Good morning and Happy New Year to everyone. It's not a Happy New Year at all for cigarette companies. But this is happening after 7 years of, I think, favorable, benign tax policy by the government. We are seeing after Maharashtra spirits hike, which was very severe. Now we are seeing the second example of a sin sector getting very high taxation. We were expecting double-digit tax hike in cigarette, but the quantum of hike, as you rightly said, is no one would have thought that this kind of a hike will happen. So yes, my sense is the stock can languish here, and street will then wait for the price hikes. Our sense is price hikes will happen gradually. For such a sharp price hike, I think every consumer company would like to do it over the next 2 quarters, cigarette company over the next 2 quarters rather than on day one. Second is, yes, downtrading can happen. On the flip side, the tobacco costs are favorable in FY27, and ITC FMCG is more of a foods company. So noodles, biscuits, and snacks. There is a GST rate cut which will benefit. Paper merger with Birla is happening, Century is happening. So those 3-4 businesses will drive the overall profitability for the company. Our sense is clearly the cigarette business in FY27, based on the current numbers, there will be a volume dip, there will be a EBITDA dip, but the stocks will languish. Yesterday's 10% correction, I think largely it is factoring in this kind of a very sharp up.
All right. Abneesh, we'll come back to you for more. Meanwhile, we also have Amnish Agarwal, who's the Director, Institutional Research at PL Capital. Amnish, obviously, initial reading is between 25 to 35, almost up to 40% price increase as well. That's unprecedented. Have you all ever done a sensitivity analysis on what kind of impact it could have on volumes, earnings, and how much of it is in the price? Because, what the consensus now is, even if the stock does not fall more from here, it's unlikely to rally back. Would you agree with that view?
Okay, hi Mangalam. So 2 things here. First of all, I think this is very unprecedented kind of a situation. So never ever we had seen more than say 15-20% kind of a price increase in any single year. And we have instances of say 2015, 2016. I will not cite 2021 because of COVID, but that year also there was a massive increase in taxes which had happened. So in the past also we have seen 8%, 9% kind of a volume decline, and given the fact that this price increase will be maximum we have seen in the history in the last 20-25 years at least. So I think the volume dip could be much more than what we are anticipating. I think it can go into the at least double digits. Okay, is my sense at this point of time. Now, in terms of profitability, I think whatever you can say, even if they improve margins, I think the profitability in cigarettes might take a little bit of it. There will be some, you can say, benefit which will come to them in paper as well as in FMCG. But overall, I think we have got our estimates by around say 10 to 11%, and it would be very difficult for a company to show any meaningful profit growth. It's like -2 +1 +2 kind of a situation. Now, coming to the stock price, I think it is not only to do with earnings. ITC was always a very cheap stock. The valuations were very attractive. And however, the problem here is the change in the policy stance of the government. Because we have seen that whenever the policy stance is against the industry, it is not only the earnings which take the hit, it is the P multiples which take the hit. So, for example, you look in the past, the stock even went down to sub 200 levels because every year we used to see the price increase, which is happening due to taxation. And now if you look at the rates which the government had given when they passed the, you can say, the Excise Act, and the rates which have now been imposed, still there is a gap of 25 to 40%. It means that maybe next year, maybe 2 years down the line, that your excise rates can actually go up. So that actually makes the problem slightly structural, because we had seen relatively, you can say, stable taxation from the last 5 years, due to which there was, you can say, a lot of share which the industry had gained from illicit cigarettes, lot of, you can say, stability which had come into the performance, and which had actually resulted in the, you can say, the stock also going up from sub 200 to 500 rupees at one point of time. Now with this kind of I think policy stance, I think despite big hit to the stock coming yesterday, I don't rule out the stock gradually, I would say, losing favor with many of the institutions, and I see a slow drift happening in the stock over the medium term.
All right. So that's the focus on ITC. Coming back to you, Abneesh. Abneesh, ITC wasn't the only news yesterday. Day one of the year. By the end of the day, we also got the long impending merger announcement for Sapphire and Devyani. Prima facie, it looks positive, Devyani, because one, the deal is done at par, and secondly, the synergy benefits to Devyani would accrue a lot more, and there is a valuation gap as well. So they've gotten more revenue, more EBITDA for a lesser shareholder dilution. What's your view if you cover these two stocks and on the QSR space in general?
Yes, it's a positive development. This was being expected for a long time, and good to see that happening. And clearly, there will be cost synergy benefits. There will be the headquarters saving, etc. So yes, it's positive for Devyani, and we are definitely expecting some kind of a recovery in terms of the QSR and Pizza Hut, and definitely we do see that the stock should recover. Because there has been almost 50,000 crore kind of a GST consumption boost. So we see that the discretionary categories will see benefit. So yes, it's positive for Devyani. Yes.
All right. Take that point. Abneesh, top picks before we get into earnings season?
Sure. In terms of Q3, again, our topics will remain largely the same. So we like Nestle, we like Britannia, Godrej Consumer, Marico. We also like Asian Paints. These will be the top picks. Tata Consumer continues to be something on terms of our recommendation. The stock has done quite well. So near term, yes, the valuation is almost priced to the perfection. But from a 1 year, Tata Consumer continues to look good. So these will be the top picks from the FMCG perspective.
Okay, all right. Gentlemen, thanks very much, both of you, for joining us. And it's a pleasure getting that perspective. I mean, it's not pleasurable news with regards to especially tobacco taxation. But on the QSR front, I mean, it's a deal which has been long awaited.